Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So guys, let's take a look at the gold market as we usually do. On the gold market we have a relatively rare setup that could be called as Judd Napoli triangle failure breakout. Also Judd Napoli has such setups for the hand shoulders pattern, but it's not big difference what patterns could fail, whether it will be hand, shoulders or triangle, because the idea almost the same. The major idea for this setup is existing of the strong support area right below the border of the pattern. In our case this is triangle. If the hand shoulders, it means that some significant support should stand below the neckline. That should prevent market from completing and reaching the target of the pattern. So the idea of the pattern is that market, when it will meet this strong support, will fail to complete the breakout and will show the failure breakout and return back in the body of the pattern, or even will lead to the opposite action. This is some kind of the trap. So and here we have such sort of the setup on the gold market. Because take a look, as initial ABCD pattern here has the target approximately at 13 even area. Also some kind of the inner butterfly could be recognized here, that also has the target approximately 1295. All this target stands around major daily confidence support 1298, 1308 area. Also guys, take a look, this will be monthly pivot point. So it means that it's very high probability that market could drop below 13 even, grab the stops below these lows, and then return right back up. Also this is very typical for the gold market. So the gold market is very cunning market, likes to show some failure breakouts, wash and rinses, stop hunting action. So something of that sort, everything that leads to fast loss among the traders. And all that punishes the traders that has no really experience with the trading on the gold market. That's why this potentially our major setup that we have on the daily chart, and it's very probable that something should be triggered on the non-farm payroll release. Currently guys, our Reuters poll suggests that market should get approximately 180,000 of the new jobs created in July, and we will use this level as the beacon for analysis of the real numbers. But overall setups looks very nice, and the attractiveness of this setup is because it's really rare. So it's not very often we see such sort of the patterns. So double repos, Brandon bodies by the Judd Napoli we see relatively often, but this kind of the setups, it's not very often you could meet on the market. That's why we mostly will be watching for this potential breakout. What other signs we see here? On the 4-hour time frame chart guys, we see another ABCD pattern that also, following by the market mechanics, suggests another leg down. Because take a look at this most recent ABC top pattern. What we have: initial leg AB drop, upward retracement, BC leg, drop right to the 100% extension target. So here right to the border of the triangle. If market really has intention to complete this ABCD pattern and then reverse up, this should happen already. But take a look what we have instead: drop, upside retracement after the completion of the ABCD right at the Fed speech on Friday, and another return back to the neckline. So this drop, most recent action down, from the perspective of this ABCD pattern, should be treated as the downward continuation. So that was extension, contraction, extension, contraction. This is another extension leg. Although right now market maybe has no power or driving factor to drop immediately, but we know that we will have a bit later on this current week the ADP report, and what's more important, non-farm proposals. And it's really easily could happen that market will drop here. That's why from the market mechanics, retracement after the completion of the ABCD pattern already has happened here. And that is some kind of the continuation. But market just has a bit lack of power to continue it immediately and wait for the driving factor. Now it's coiling right around the bottom of this triangle, and the coiling and standing around the border, it's not very good sign from the bullish point of view. That's why, guys, it's another some kind of the potentially bearish setup. Currently, personally, I do not see any some kind of the patterns that is forming here. It's very tight consolidation. Market mostly stands inside the swing of the Friday's Yellen speech, so that's why currently we can't recognize some other patterns that probably could definitely point on the possible downward continuation. Initially, we thought that maybe this butterfly could be formed, but on Monday, market has dropped slightly lower and has exceeded this swing, so it has created the new lows. That's why this probably will not be the butterfly. So let's see what shape market will form here within the coming couple of sessions. Maybe market will form something that will give us more signs on the, maybe hints on the possible downward breakout. But right now, guys, the things that we already have, I mean this ABCD pattern, that ABCD, and in general daily setup, potentially could lead market at least to fail or breakout of this triangle, grabbing the stops below these lows. This is just a minor setup, minor target that could be completed, and it's very typical for the gold market. Whether it will lead to the real drop here is also possible, but currently we will not focus on that. For us, its major idea is that this setup that we have currently. So let's keep watching what patterns will be formed on the intraday charts here. It's also important, and what will happen by the end of the week on the non-farm payrolls release.